What if I told you that selling your XRP today could be the biggest financial mistake of your life? I know. That sounds exactly like internet hype. Another loud voice telling you to never sell while the price keeps moving sideways and your patience gets tested every single day. Most people hear this and immediately switch off, and honestly, I don't blame them. Crypto is full of noise, exaggeration, and empty promises. But this week, something important changed, something fundamental. And that's exactly what we need to talk about today. Welcome back to We Are Cosmic. If this is your first time here, this channel is all about real finance, real crypto, and real analysis, not hype, not moonboy fantasies, and not emotional trading. Here, we focus on what institutions are actually doing, not what Twitter wants you to believe. My goal is simple: help you understand the bigger picture so you can make smarter decisions in this fast-changing financial world. Now, let me ask you something important. Why do you think institutions don't panic when prices drop? Why do banks, funds, and trillion-dollar balance sheets stay calm while retail investors lose sleep over red candles? It's because they are not here for quick profits. They are here to own infrastructure. And right now, XRP is moving from being just a traded asset to becoming financial infrastructure. While most people are staring at charts asking, why isn't XRP at $10 yet? Ripple and the developers on the XRP ledger have been quietly building in the background. Not hype, not marketing, real systems. They are no longer just building a faster payments network. They are building something much bigger, a potential replacement layer for the global banking core. And in that system, XRP is not decoration. XRP is the fuel. This is where things start to get serious. You may have heard the term native lending recently. It sounds boring, right? Like something meant for bankers or accountants. But in crypto, native lending is not boring at all. It is the difference between an asset you trade and forget and an asset you hold because it works for you. This is where the entire logic of XRP changes. Here is the simple warning I want you to understand today. Institutions are not chasing hype. They are chasing utility. And once they lock in that utility, they don't let go. Some of the most respected voices in crypto are now saying, never sell your XRP. Not because they are fans, not because they are emotional, but because they understand a deeper shift. We are moving away from a system where banks use your money and pay you almost nothing toward a system where your asset itself becomes part of the banking system. If you sell XRP too early, you're not just selling a token. You're selling your position in the future plumbing of global finance. Most people enter crypto hoping for a quick win. Green candle, excitement. Red candle, fear. And that emotional cycle is exactly what big players depend on. They want you impatient. They want you bored because boredom leads to selling. And when you sell, they quietly accumulate. Banks don't gamble. They don't chase pumps. They build rails, systems, and foundations that last decades. While retail investors argued for years about whether XRP is a security or not, Ripple was busy working with central banks, regulators, and financial institutions. That difference in mindset matters. Today's video is not about price targets. It's not about $5, $10, or $100 XRP. It's about why the game itself is changing. Native lending on the XRP ledger is not just a feature, it's a signal that institutions are preparing to use this system at scale. And if you understand what that means early, you stop thinking like a trader and start thinking like an owner. To understand why institutions are suddenly so interested in XRP, we need to slow things down and explain native lending in a very simple way. No technical jargon, no confusing blockchain terms, just logic. Imagine you own a gold bar. In the traditional financial world, if you want a loan against that gold, you must take it to a bank. The bank holds your gold, charges you fees, decides the interest rate, and controls the rules. You don't really have power, the bank does. That system has existed for hundreds of years. Now imagine a different world, a world where the bank is not a building or a person, but code, transparent code. Code that lives on a public ledger and follows rules that cannot be changed overnight. This is exactly what native lending on the XRP ledger represents. Native lending means lending and borrowing are built directly into the ledger itself, not added later, not dependent on third-party apps, not relying on risky smart contracts written by unknown developers. It is part of the core system. That is why the word native matters so much. Most DeFi platforms you see today are like experiments. Some work, many fail. Hacks, exploits, rug pulls, we've seen it all. Institutions hate that uncertainty. They don't trust systems that can break overnight. But the XRP ledger was designed differently. It was built for stability, speed, and scale, not speculation. Now let's talk about why institutions care so deeply about this. When banks move money today, it's slow and expensive. Payments pass through multiple intermediary banks. Fees stack up, delays happen, money gets stuck. XRP was originally designed to fix this problem by acting as a bridge asset, but native lending takes this one step further. With native lending, institutions can borrow and lend directly on the ledger using assets already inside the system. That means capital is no longer sitting idle, it becomes productive, and productive capital is exactly what banks want. Here's the key idea most people miss. If institutions are using the XRP ledger for lending, borrowing, and settlement, they need deep liquidity. They need large amounts of XRP available at all times. And once that liquidity is in place, it doesn't move around like retail traders do. It stays, it works, it earns. This is where the mindset shift happens. If you are holding XRP in that environment, you are no longer just a holder. You are part of the infrastructure. Your asset is helping the system function. And systems that power global finance are not built for short-term price pumps. They are built to last decades. Now look at the market behavior today. Volatility, sudden drops, emotional price swings. This is not random. Volatility is the tool that shakes weak hands. It makes people question their belief. Maybe I should take my 20% profit and leave. Institutions love this moment because they are not aiming for 20%. They are positioning for the next 50 to 100 years of financial evolution. Selling during this phase is like selling land before a city is built because the ground looks empty. The real value comes after the infrastructure is finished. Another important point, institutions do not want hype-driven assets. They want assets that do something. Native lending turns XRP into a productive asset, not just a speculative one. Similar to dividend-paying stocks, but on a global digital scale. This also changes how we think about price. For years, the conversation has been, what price will XRP reach? But that question starts to lose meaning when the asset itself produces yield and utility. When banks rely on it to function, its value is no longer just speculative. It becomes structural. You don't sell something that generates value just by existing. You use it. That's why some analysts say, never sell, not emotionally, not blindly, but strategically. Because selling XRP in a fully institutionalized ledger is like selling the road while everyone else is charging tolls on it. To really understand why XRP is in a different position than most cryptocurrencies, we need to talk about who is behind this system and how they have played the game. This part is very important because most people misunderstand Ripple's strategy completely. Ripple was never trying to become a rebel project. It was never trying to fight banks or replace governments overnight. Instead, Ripple chose the hardest path in crypto, working with regulators. While many projects avoided rules, Ripple leaned into them. For years, this decision made XRP unpopular in the crypto space. People called it a banker's coin as if that was an insult. But here's the truth. If you want to change the global financial system, you cannot do it without banks, regulators, and governments. They control the rails. They write the rules. Ripple understood this early. While other projects were focused on meme coins, NFTs, and short-term hype, Ripple was building relationships with central banks, the IMF, the World Bank, and large financial institutions. That doesn't make headlines every day, but it matters far more in the long run. This is why regulation is not XRP's enemy. It is XRP's advantage. Institutions do not deploy billions of dollars into systems that might be shut down tomorrow. They need legal clarity. They need compliance. They need stability. Ripple spent years absorbing legal pressure so institutions wouldn't have to. Now look at where we are today. The regulatory fog is slowly clearing. Governments are no longer asking, should crypto exist? They are asking, how do we integrate it? And when that happens, the projects that already follow rules move to the front of the line. This is why institutions are no longer just studying XRP technology. They are implementing it. You might not see this in mainstream headlines. News media often focuses on fear, lawsuits, and delays because fear gets clicks. But if you look at on-chain data, you see a very different story. You see large wallets growing larger. You see XRP leaving exchanges. You see long-term accumulation happening quietly. This is how smart money moves. Loud when buying is expensive, silent when buying is cheap. Institutions don't tweet, they don't make YouTube videos, they prepare in the background. And here's the key warning. By the time institutions openly announce full adoption, the opportunity for cheap entry is usually gone. Retail investors are invited after the infrastructure is already owned. Ripple's focus on compliance also makes native lending far more powerful. Institutions trust systems that are built to scale legally. Native lending on a compliant ledger is not risky DeFi. It is institutional-grade finance. This is also why XRP's role starts to shift from crypto asset to financial utility. When banks lend, borrow, and settle on the same ledger, you don't need layers of traditional banking anymore. The ledger itself becomes the system. This is what scares legacy finance, but also attracts it. Because once they realize the old system is breaking, they have only two choices: resist change or control it. History shows they choose control every time. Now here's the uncomfortable truth. If retail investors don't hold their assets, institutions will. If individuals sell early out of fear or boredom, institutions step in and provide the liquidity themselves. They earn the fees. They control the flow. This is why this period matters so much. We are still early enough where regular people can own a meaningful piece of this infrastructure. That window does not stay open forever. Once native lending is fully live and institutional capital floods in, the cost of participation rises sharply. Just like real estate, just like early internet stocks, just like every major infrastructure shift in history, that problem is liquidity. Right now, there is plenty of money in the world. Trillions of dollars exist as numbers on screens, but moving that money across borders is slow, expensive, and inefficient. Banks are forced to keep huge amounts of capital locked away in something called Nostro and Vostro accounts just to make sure payments go through. Think of it like this. Imagine you had to keep cash in every single store you might visit, just in case you wanted to buy something there. That's how banks operate today. It's inefficient, outdated, and incredibly costly. This is what people mean when they talk about trapped capital. XRP was originally designed to fix this. Instead of pre-funding accounts all over the world, banks can use XRP as a bridge asset to move value instantly. No waiting, no middlemen, no massive fees. But native lending takes this idea even further. With native lending, that liquidity doesn't just sit there waiting to be used. It becomes productive. Assets can be lent, borrowed, and reused inside the same system. This is a huge upgrade to global finance. For institutions, this is not optional. It's necessary. The world is entering a liquidity crisis. Governments are printing money. Interest rates are unstable. Traditional systems are under pressure. Banks need ways to move capital faster and more efficiently. XRP solves a real problem, not a theoretical one. This is why pundits who understand this system say, never sell. They are not looking at today's price. They are looking at a future where XRP is the most liquid asset in the world. And when an asset becomes essential, you don't trade it for fiat that loses purchasing power every year. This also changes how we think about value. If XRP helps settle global debts, facilitates lending, and unlocks trapped capital, then its value is not based on hype. It is based on usage. And usage at a global scale is incredibly powerful. Here's an important mindset shift. Most people still think of the XRP ledger as a database or a payments rail, but in reality, it's becoming something much bigger. It's evolving into a decentralized financial core, almost like a digital central bank, but without political control. If you can lend, borrow, swap, and settle on one ledger, you no longer need the old banking stack. You remove layers of bureaucracy that have slowed finance for decades. This is exactly why institutions are racing to plug in. But here's the dark side of this story. If institutions provide all the liquidity, they own the system. They earn the fees. They control access. And regular people are pushed back into being customers instead of owners. This is why holding matters. This period, right now, is likely one of the last times retail investors can own a meaningful share of this infrastructure at relatively low cost. Once institutions fully commit, prices adjust, and access becomes expensive. People love to say crypto has no intrinsic value. Those same people once said the internet was useless. The intrinsic value of XRP is not the token itself, it's what the ledger does. Moving value anywhere in the world in seconds for almost nothing is a service the world desperately needs. And every new feature, like native lending, increases that value. Still, holding through this phase is not easy. Psychologically, it's hard. You'll see other coins pumping fast. You'll feel left behind. Critics will call XRP a banker's coin, like it's a bad thing. But ask yourself a simple question. Do you want to bet on memes or on the institutions that have controlled global finance for centuries? History shows who usually wins. When people hear the phrase never sell your XRP, many misunderstand it. They think it means locking your assets away forever and never using them. That's not what this idea is really about. Never sell is not about being extreme. It's about changing your relationship with wealth. Let's use a simple example. If you own a house and its value goes up by 5%, you don't immediately sell it. You either live in it or rent it out. You use the house as an asset. You borrow against it if needed. You let it work for you over time. This is exactly how institutions think. With native lending on the XRP ledger, XRP starts behaving like that house. You don't need to sell it to access value. You can use it as collateral, provide liquidity, or participate in lending markets, all without giving up ownership. This is a massive shift. In the old system, if you needed money, you sold your asset. In the new system, you borrow against it. That's how wealthy people stay wealthy. They keep ownership while still accessing capital. Now imagine a world where you can take a loan against your XRP to start a business, buy property, or fund an investment without a bank deciding your fate. The rules are transparent, the code is clear, no hidden fees, no sudden changes. This is what institutions are preparing for. They want a system where they can fund operations by borrowing against digital assets instead of selling them. That's capital efficiency, that's smart finance. And here's the warning. If you sell your XRP now, you are choosing to stay in the old world, the world where you work for money, banks profit from it, and inflation slowly eats your savings. The advice to never sell isn't about loyalty to Ripple. It's about understanding where the world is heading. We are moving toward a tokenized economy, stocks, real estate, bonds. Everything will live on ledgers. And the most valuable real estate in that world is not the tokens themselves, it's the ledgers. The XRP ledger is positioning itself as prime financial real estate. This transition is uncomfortable. You are betting against the status quo. You are holding while others chase fast gains. You will question yourself. You will feel lonely at times. You'll see memes pump 100% in a weekend. You'll hear critics say XRP is boring. You'll hear people call it centralized or a banker's coin. But ask yourself this. Would you rather bet on a meme that depends on the next buyer being more emotional than you, or on institutions that plan decades ahead? Institutions don't like retail investors owning infrastructure. They want control. They want you shaken out before the real move happens. That's why fear, boredom, and doubt are such powerful tools. Now here's the practical part. Never sell does not mean never plan. You need to think ahead. Are you going to provide liquidity, participate in lending pools, use XRP as collateral? These decisions matter. The people who benefit most from major financial shifts are not the ones who react late. They are the ones who prepare early. And this distinction matters more than anything else. In the speculation phase, price is everything. People trade charts. Emotions run the market. But in the utility phase, access is everything. Once institutions rely on a system to function, they don't care about short-term price swings. They care about reliability, liquidity, and control. This is where many people get left behind. History shows this pattern again and again. Railroads, electricity, the internet. The people who truly built wealth were not the ones trading headlines. They were the ones who recognized a fundamental shift in infrastructure and refused to let go of their position. XRP is that kind of shift. Native lending is the feature that makes the XRP ledger indispensable. It turns the ledger into a full financial system, not just a payment rail. When banks can lend, borrow, settle, and manage liquidity all in one place, they don't need the old stack anymore. They need XRP. And here's the uncomfortable truth. Institutions are hoping you sell. They want you tired. They want you bored. They want you scared by volatility. Because every XRP you sell becomes liquidity they can control. This is the last phase where regular people still have a seat at the table. Once institutional capital fully locks in, the price of admission rises, access tightens, and ownership shifts. At that point, most people will look back and say, I almost made it. So what do we do with this information? First, stop watching the price every 5 minutes. Price is noise. Development is signal. Track what's being built on the ledger. Watch institutional behavior, not influencer emotions. Second, educate yourself. Knowledge in this market is not just power, it's survival. If you don't understand what you own, you will panic at the first 10% drop. But if you understand the why, volatility becomes irrelevant. This is why community matters. Surround yourself with people looking at the long-term picture, not just tomorrow's candle. Third, make a plan. Never sell is a mindset, not a rule. Decide how you will use your assets in a utility-driven world. Lending, liquidity, collateral. Preparation beats reaction every time the warning has been issued. The institutions are moving in. The ledger is evolving. The old system is breaking. The only question left is simple. Will you be an owner of the future or just a spectator watching it happen? Once you sell, there may not be a way back in at these levels. This is the moment where strong hands are forged. Welcome to the new era of finance. This is We Are Cosmic. If this video helped you see the bigger picture, hit that like button, subscribe to the channel, and watch the next video on your screen right now.